Freeport LNG's announcement that it would not begin initial production until November rather than the October startup previously targeted crushed futures. September futures tumbled all the way to a $9.05 intraday low before rebounding. Still, the prompt closed the session on the lower end of the nearly $1 trading band. U.S. liquefied natural gas company Freeport LNG said on Tuesday that it now expects initial production to resume only in November at a shuttered export plant in Texas, delaying the timeline from an earlier estimate of October. Freeport LNG shut the plant, which supplies about 20% of U.S. LNG exports, following an explosion and fire on June 8. Its closure helped to push up LNG prices in Europe and Asia and dampening U.S. natural gas prices. Freeport's recovery plan would utilize the second loading dock as a lay berth until loading capabilities at the second dock are reinstated in March. At that time, the company expects to be capable of operating at 100% of capacity. The later timeline for a return of operations could shift 106 billion cubic feet of gas back into storage, assuming Freeport ramps up one liquefaction train at a time. This would put inventories back on track to reach 3.4 trillion cubic feet at the end of October. Some estimates had shifted closer to 3.3 trillion cubic feet based on recent storage data. Cove Point LNG also is gearing up for annual scheduled maintenance in September. As such, the Freeport news could send TTF prices screaming even higher when European trading gets underway overnight. Is that going to take Henry Hub back up?